Whether you're the kind of person who likes to set New Year's resolutions or not, now's a good time to reassess your repayment strategy for your student loans. It's easy to pick something and then just let it sit on autopilot for years. In today's video, I'm going to talk about how you can evaluate your current repayment strategy to decide if it's really what's best for you. There are really three things to consider when you're evaluating your current repayment strategy. The first is, how affordable is your current strategy? Are your monthly payments easy to make every month, sometimes easy to make, or are they really tough for you to afford? Does your current strategy match your repayment goals? Are you wanting to pursue loan forgiveness, pay off your loans as quickly as possible, or pay as little each month? And is your strategy getting you there? Lastly, how do you feel about your current repayment strategy? Are you indifferent, empowered, or stressed out by the way you're repaying your student loans? If your current strategy isn't affordable and it's stressing you out, it's pretty obvious you need to make a change. But even if you're somewhat indifferent and you can easily afford your monthly payments, it might be time for a change too. We'll talk about the three main paths you can take to come up with the best repayment strategy for yourself. The first strategy is to find the right repayment plan. All of the repayment plan choices I'm going to discuss are only for federal student loans. If your monthly payments are unaffordable, an income-driven repayment plan might be the best way to lower those monthly payments. The downside of an income-driven repayment plan is that the longer you take to repay your student loans, the more interest you're going to pay. Ultimately, if you can't afford your monthly payments, an income-driven plan might be a way to take off the stress of your student loan debt. What if you can easily afford your monthly payments? If that's the case, it makes sense to be on an aggressive repayment strategy such as the 10-year standard repayment plan. Under that plan, you'll make the same monthly payment for 10 years, and you'll pay the least amount of interest overall out of all the federal repayment plans. I'm going to link below a post about the different repayment plans and how to pick the one that's right for you. Check it out if you want more details. The next option you might be considering is student loan forgiveness. For some borrowers, student loan forgiveness is a very appealing opportunity. Right now, the most talked about loan forgiveness option is public service loan forgiveness, but there are actually two other major federal programs: teacher loan forgiveness and income-driven loan forgiveness. In general, these federal student loan forgiveness programs are pretty specific in their eligibility criteria, so one of the major things you want to make sure of is that you're meeting all of the program requirements so that when you think you'll get loan forgiveness, you really will get it. It's also important to note here that the three federal loan forgiveness programs only forgive federal student loans. They don't forgive private student loans at all. PSLF is designed to forgive the remaining student loan balance after a borrower working in a public service job for a nonprofit, government, or tribal organization makes 120 eligible payments under an income-driven repayment plan. That means they have to work in that job and stay on that payment plan to make at least 10 years worth of payments to have their loan amount forgiven, tax-free, after they're done. Teacher loan forgiveness is designed to provide up to $17,500 of loan forgiveness for highly qualified teachers in low-income school districts after 5 years of teaching. Lastly is income-driven loan forgiveness. It's an option available to potentially all federal student loan borrowers. This option forgives the remaining balance of student loans after 20 to 25 years of income-driven payments. The forgiven amount is taxed as income. If you want to read more, I'll link a post below that talks about each of these three federal loan forgiveness options and their details. Last up is student loan refinancing. Finally, I'm going to talk about an option that suits borrowers with private loans, federal student loans, or both types of student loans. Refinancing is the only option available to any kind of borrower that lowers the interest rate you pay on your student loans. I'm just going to talk through a few different situations so that you can consider whether refinancing might be right for you or not. First up, if you have only federal student loans, just a reminder that refinancing those loans converts them to private student loans. That makes them totally ineligible for any of those three federal loan forgiveness programs that I just talked about, and it eliminates their eligibility for a lot of borrower protections like income-driven repayment plans. Once those loans are refinanced, you can't ever make them federal student loans again. But if you're confident you don't need any of those things, you could still consider refinancing if you get a significant interest rate discount. If you already have private student loans, refinancing doesn't really carry much risk. If you can get a lower interest rate, especially if you can get a lower fixed interest rate, You won't give up borrower benefits because you really didn't have any to start with, so the lower interest rate really can save you thousands of dollars on interest in this situation. If you have a mix of federal and private student loans, you could consider refinancing only the private student loans. Again, it depends on your unique financial situation and your interest rates, but let's say you get offered an interest rate that's not really much of an improvement of your federal student loans, but is a significant improvement for your private student loans. You could certainly only refinance your private student loans and leave your federal loans as they are. If you want to learn more about refinancing, I'll link up the Repayable Refinancing Strategy Guide below so you can check it out. After assessing your student loans, do you need a new repayment strategy? Or are you on track to meet your student loan repayment goals? Let me know in the comments below. And as always, if you liked this week's video, please give me a like and hit that subscribe button. There's a new video every Wednesday. And if you're on Instagram, be sure and check me out. I'm at the Repayable. We'll see you guys next week. Bye!